Okay, good morning, everyone. And welcome to another episode of our Milton Chamber of Commerce COVID Conversations, trying to share information from one member to another. And this morning, we're very fortunate again to have our friends from Grant Thornton with us. This is the second COVID conversation we've done with Grant Thornton, so we truly appreciate their help and their expertise. So this morning we have two speakers and one additional specialist with us to answer all of your questions. So a reminder to everyone that there is the Q&A box, so please make sure you put your questions in there. We're going to go through the presentation first, and then we'll have the Q&A afterwards. But please start submitting your questions. And for those that submitted questions ahead of time, we do have those, so we'll get to those as well. So let me tell you a little bit about our guest speakers this morning from Grant Thornton. We have Mike Healy joining us, who is the Senior Manager of Tax Services. Mike works in the domestic tax group, servicing small and medium-sized privately held businesses throughout Southern Ontario. Since earning his CA designation and completing the 3 levels of the in-depth tax program in 2013, Mike has been helping clients and helping clients meet their corporate and personal goals. We also have McLaughlin with us, who is a Senior Analyst Tax Services with Grant Thornton. Michael works in the domestic tax group, serving owner-managed businesses out of the Mississauga and Georgetown offices. And Michael specializes in tax compliance and tax planning for both owner-managed businesses and large private corporations. And our specialist with us today is Mihaela Dinis. Mickey has over 17 years of public practice experience servicing small and medium-sized owner-managed companies. And she specializes in cloud accounting service solutions, day-to-day accounting compliance, and advisory for corporations of all sizes. So I think you'll agree that we have a great group with us today, a lot of experts to try and talk to us about a lot of the government measures that have been happening through the COVID period, and trying to help us with some of the confusion. So with that, I'm going to turn it over to Mike Healy to get us started.
Thanks, Scott. Thanks for having us here today. A lot of things have really changed since the last time we talked in early April. A lot of information at the time, it seemed like, was doom and gloom. We were dealt with a lot of different measures that were out there that were trying to help people. There was press briefings. There was information on Government of Canada's website in terms of what was being offered, but there wasn't any legislation enacted. It was all just hearsay at that point in time. So we spent a lot of time just trying to navigate through the different communications that we had to try to offer or let people know what was being offered to them. But we still had to wait on certain things to be announced. In the last month and a half, a lot has really changed. A lot of the programs have been announced now, and we're going to go through a lot of those today. Let me just get to the next slide here for you. This is the 3 of us here. If anyone has any questions at the end of our presentation, please feel free to reach out to the 3 of us. We have email addresses, phone numbers. Please, we're all available here to help. We want to help everyone that we can. We're required at the beginning of every presentation. This is just to let you know you can't sue us for anything we say today. So these are the 5 main topics we're going to be talking about today. 3 of them are categorized in the help for businesses and 2 for help for individuals. Under businesses, we're going to talk about the CEWS program, CACRA, CEBA, and I'm just going through the acronyms for you today. There'll be a little pop quiz at the end to see you can run these all back off to us. And then there's 2 for individuals. There's the CERB program and the Subsidy program. 3 of these have been around for a while. The CEWS program has been around for quite a while, and the CEBA program and CERB. So we're going to be talking through the main changes that have happened in those programs since we last spoke. We won't be going through all the specific details because I think a lot of that's been out there already. We'll go through it in a little bit of detail, but we will go through the major changes that have happened since we last chatted. And then we'll be talking about the CACRA program, which is the Ontario Rent program, which is getting a lot of attention now. Nothing in that program has yet to be announced, but there will be information forthcoming. I think in the next week or so. Mike McLaughlin will be able to speak to you a bit on that, as well as a new Subsidy program, which is the Canadian emergency benefits for students. So on the CEWS program, as you probably know by now, it's a wage subsidy program, which is equal to 75% of wages paid to an employee up to $847 a week. This was the most significant of all the programs really that are out there right now, but it also was the most complicated because it's such a lucrative program. There are a lot of complications in the way the legislation was written. Obviously, they want to make sure that it's intended for those that need it, and they want to avoid any abuse of the system. So there is a lot of terminology around it. So a lot of the technical terms are very complicated in here. So I recommend, if you have any questions, please feel free to reach out to us ourselves, your accountant, or any other professional to help you navigate through the different rules here. But we'll touch on some of those today. So like I said too, is a 75% wage subsidy program up to $847 a week. You can't gain any more than $847 per week per employee. There's no overall limit though, so it doesn't matter how many employees you have, doesn't matter how much the employees are making. You're capped at $847 a week, but you continue to receive that program for a 12-week period between March 15th and June 6th. And you have to apply each month. So you apply the first month for the period of March. You have to then reapply again for April, and so forth for May. The door was open for a possible extension when this was first announced, and the government recently exercised that. I think on May 8th, they announced that there would be an extension of this program, so it's going to be going further than June 6th. We don't know to what date yet, but expect that information to come out shortly. And who's eligible, and the easiest way to bring this about is to tell you who's not eligible, and that's really just a public institution. So every individual, corporation, charity can apply for this program as long as they have eligible employees. The only caveat is it can't be a public institution, which is a government, crown corporations, universities, schools. So it's very far-reaching. And I think when we talked back in April, the announcement at the time was you'd have to show a 30% decrease in revenue month over month or year over year. So in March, for example, you'd have to show a 30% decrease March 2020 versus March 2019. Welcome news when the legislation came out, they did allow for only a 50% decrease in March to qualify, and that was just to accommodate for the fact that a lot of businesses probably weren't shut down to midway through March. So you may not have been able to show a 50% decrease for the first half of March, but you certainly could have for the second half. But then every month after that, you'd have to show a 30% decline in revenue. Qualifying revenues is a very technical interpretation of legislation. It's kind of beyond the scope of today's presentation. So again, I recommend if you have any questions on what's included in revenue that you reach out. They allow for the accrual method or the cash-based method for accounting for revenues. There's certain things you need to take out of revenues when you're comparing year over year. They want you to take out extraordinary items and certain other items that they talked about in the legislation as well. This was welcome news when the legislation first came out. There were different questions that people had in terms of if you had different structures where you had more than one corporation in it, they wanted to make sure that there was a possibility for all those companies to be able to qualify. So for example, in the first bullet point there, if you had more than one entity in your structure and you reported revenue on an annual basis, on a consolidated basis, they allowed you to actually separate both those companies out and look at them on an entity by entity basis for revenue determination. So for example, if you had a consolidated reporting and you didn't show a 15% decrease in revenue in March, you could have, if you separated them out and maybe one company was down, let's say 30%, the other company was only down 10%, together they may not have qualified, or does that math work there? It depends on the level of revenues, but they may not have qualified as on a consolidated basis, but certainly the one that was down 30% on its own would. So they would allow you to unconsolidate those companies and report the subsidy for the one company that would have qualified on its own. The second one would be if you had an affiliated group of companies. So let's say you and your wife own a company, or you each own a company separately. For tax purposes, affiliated means any company that you control or your spouse controls. As long as you guys were considered affiliated, which spouses are considered affiliated, you could, for purposes of the subsidy calculation, combine both of your companies together under one consolidated basis and qualify for the revenue under that scenario. The reason that would work is you may have one company, so let's say one spouse's company is down 30%, another one's only down, again, let's use our example of 20% in April. You would only qualify for the 30% in April on the one company, but if you put them both together, perhaps you might get to 30% or somewhere close to 30% using larger numbers. So that would allow you just to meet the test by putting them together, and then that would allow both companies to qualify for the wage subsidy in that scenario. And the last one was talking about related revenues. So when it was first announced that you required to back out revenues that were earned from related companies. And if you had structures where you had, say, a payroll company or a management company that earned 100% of its revenue from billing a company within the associated group, that company would not qualify even though all the employees were housed in that one company. What this rule allows you to do is determine the revenue based on the other companies within that associated group. And if there's a decline in those companies, then the company that's only receiving revenue, the management company is only receiving revenue from the other associated groups would also qualify for the subsidy program in that case. So this was all welcome news. Again, a little technical, but it's important. So if you're in a situation where you have more than one company in your structure, it's important to look at one of these three things to see if you might qualify for both, even though on paper it may not look like you would. And there's different methods for calculating the revenue. So there's two different methods here. And again, you can do it on an accrual basis and a cash basis. But what you can look at is you can look at March 2020 versus March 2019 being method 1, or you can compare March 2020 versus the average of January and February for method 2. And you can show a decrease in either one of those. So you can pick the most optimal one that would work for you. So you may not qualify if you look at March over March, but you may qualify if you look at March versus January versus the average of January and February. In that case, you can use the January or February as that's more optimal to you. But keep in mind, whatever method you choose is a method you need to continue to use throughout the application of the program. So if you chose for March that you want to use method 2, you need to use method 2 for April and May as well. So that's comparing April to January and February average revenues. One thing that's worth noting here is there is also a deeming rule in the legislation that said if you qualify for one period, you will also qualify for the second period automatically. So if you qualified for the 15% reduction in revenue in March, you would automatically qualify for April, whether you showed a 30% decrease in April or not. And why that's important is if you can show a decrease in March and April, because you've shown a decrease in April, you've also qualified for May as well. So keep that in mind that if you get 1 month, you automatically get the second month, but you need to make sure that that third month you would qualify for either in May alone being a 30% decrease or April showing a 30% decrease. And I don't know how that's going to play into the new extension that we're going to be hearing. If say it extends another month, I'd imagine that in order to get it for the next June period, you'd have to qualify in May as well under this deeming rule, or June on its own. And how much do you get under the subsidy? Well, again, it's the wage subsidy, which is 75% of wages up to a certain amount. A few things in here that are very, very important that I don't think that we're getting a lot of questions on that there was a lot of unknowns about as well. So if an employer is paying an employee and they're furloughed, which means that they're being paid but they're off work and they're just kind of sitting at home earning a pay, the employer can also collect 100% of their CPP and EI contributions they made for that employee who's being furloughed. So that gets added to your total subsidy that you can calculate on top of the 75% wage subsidy. One thing that's important to mention here on the deduction from your subsidy is a temporary wage subsidy. So we were under the impression, and I think everyone was too, that if you claimed the 10% wage subsidy, and for those who don't know, that's another program that was out there that came out before this CEWS program was available, which was collecting 10% up to certain maximums of the gross pay of employees. If you claimed that 10% subsidy, we're all under the impression that, of course, you would deduct it from the Canada Emergency Wage Subsidy Program of 75%, so effectively getting a lower amount. But the way the legislation was written was it wasn't if you claimed it, it was if you were eligible. So whether you claimed that or not, if you were eligible and you qualified for the temporary wage subsidy, the 10% subsidy, you had to deduct it from your CEWS total subsidy amount. So that's important to know. So if you haven't claimed it and you were eligible for it, make sure you take it off your Canada wage subsidy, but also claim it separately on your own. I know it's really left pocket, right pocket at the end of the day, but just make sure you follow the way the legislation is written and take that out from your CEWS. You don't want to be in a situation, say a year or 2 years from now, and they end up clawing back your Canada Emergency Wage Subsidy by the 10% TWS, and you're now past the period of time when you could have applied for it. And the way it's calculated, the wage subsidy is number one in the calculation, which is the 75% amount. It's an interesting calculation. It's a little complex, but it's interesting the way it's written, and I'll talk about high level, like how it makes sense. So they take the greater of 1 or 2. So you have to look at 2 different calculations separately. So it's the lesser of 75% of the wages being paid now per week in 847. So if you're paying an employee more than $1,120, 75% is $847, you'll never get more than $847. So you're capped at that number, and that's the number you're going to use. The second part of the calculation is 100% of the wages paid now, the least of 100% of the wages paid now, 75% of the baseline remuneration. And what baseline remuneration is the average of the weekly wages you paid an employee between January and March 15th prior to all the shutdown, or $847 a week. So this calculation is interesting because in the fact that if you paid somebody less than if you paid someone more than $1,120 a week, you're capped at $847 no matter how you look at the calculation. If you paid them less than $1,120 a week prior to March 15th, and now you're paying them 75% or less of that 75% or less of that amount now, you will get 100% of the wages you're paying them now. So it's not 75% of what you're paying them now, it's 100% if you're paying them 75% or less than what you previously paid them before March 15th. And there's a special calculation if you're dealing with a non-arm's length employee, and non-arm's length refers to a related employee. So someone that's maybe the owner of the company or a shareholder of the company, themselves, spouses, or kids that are being paid a salary, there's a special calculation just for them. And what it does, it isolates number one, and it really takes out number one. So it puts in the nil calculation. So this calculation will always be nil in number one. So now you're looking at number two. And what they want here is they want there to be salaries to that individual prior to March 15th. So if there was no salary paid to that individual prior to March 15th, between January and March, and they're now being paid a salary after, you cannot claim a subsidy on that related employee's wages. And it hurts a little bit in the sense that if you did own a company and you're receiving dividends as opposed to wages, dividends do not qualify for the wage subsidy. So you cannot qualify for any amount back if you were just paying yourselves dividends. All right, in terms of the application, it was open back on April 27th. You don't have to apply right on April 27th. You can go all the way until October 2020. So anytime before October 2020, you can apply for any of the months that were available for you. So the program will be open. What has to happen is you first need to qualify under the wages. You need to be you need to have an eligible employees. You need to calculate your subsidy. And then there's also this form called an RC 661, which is an election form. And with certain attestations on it that you need to claim. You don't actually file this form, you fill it out and you keep it handy in case there's a CRA review. To make sure that form is filled out prior to completing the application. 3 different ways to apply. You can go through My Business Account if you don't have one set up. At the end of our presentation, we have a link to our GT COVID website, which has various details. It's very straightforward information on how to set up a My Business account if you already haven't done that. If you have a business representative, like an accountant that can act on your behalf, they can apply for you as long as they have level 2 or level 3 authorization with the CRA, which allows them to make changes on your account. And the third option that they opened up for this program alone was a web form application. And as long as you had a web access code for submitting payroll in the past, you'd be able to use that method as well. So CERB versus queues, this was a topic that came up a lot, because in the legislation, what they said was if the employee was receiving CERB, which is that $2,000 for the 4-week period, you cannot claim queues, so the wage subsidy for that same employee in that claim period, so in that 4-week period. And there's different scenarios. So initially we thought, well, that's difficult because what if an employee started receiving it and within a week they were hired back? Within that 4-week claim period, what we thought was you would not be able to claim the wage subsidy for that employee. That turns out not to be the case. And these are 3 different scenarios that might apply in your situation that could help. So I'll just read it out here. And if you have any questions about this, you let me know at the end. We can talk about it at the end. So if an employee was rehired after being laid off for 14 or more consecutive days in a claim period, so the first claim period, for example, was March 15th. So if they were paid, if they were off for 14 straight days from March 15th onwards, they would have claimed CERB, or they would have been eligible to claim CERB. And if you hire them back after those 14 days, you cannot claim the wage subsidy for that employee up until the April 11th period. You can for the next period, but up for the first period, you would not have been able to claim the subsidy for them. If you rehire them back less than 14 days off, and even if they applied for CERB, you can still claim the wage subsidy for that employee within that claim period, but the employee would then have to repay CERB. And that onus would be on the employee to do that. And the third situation was if an employee was rehired at any point in time in the claim period and they were paid retroactively. So let's say you hired someone back in April, or they were laid off March 15th, and then you hired them back in April. If you agree to retroactively pay them back to March 15th, you could claim the wage subsidy for that employee all the way back to March 15th under that retroactive pay. But in that situation, again, the employee would have to repay CERB. Some other guidance that came out. So CRA has an FAQ on their website right now, which was released in middle of April, which is very informative. Any questions that were posed, they typically answer them there, especially if the general population is asking the same question. Under the multiple entity slide, which I'll just quickly circle back to, this here. So if this applies to in any of your situations where you're looking to elect under one of these different rules, you don't have to use the same method for every claim period. You can use it for one claim period and go back to the original way of doing it for the next claim period. So that was important and very favorable guidance. And the one thing to note too, that if you choose under the revenue description, you have the option to use the accrual method or the cash method. If you choose whatever method you choose, for example, the cash method, you have to use that cash method for every single claim period going forward. So you cannot revert back to the accrual method or the cash method back. You cannot flip-flop back and forth. So important to note as well. And just some other guidance in terms of what CRA, there's a lot of questions they had on, well, what is remuneration? Again, it's very basic and it's in a sense, it's at the end of the day, it's really anything that you withhold tax on for an employee with certain exceptions, and some of those exceptions are listed here. So any retiring allowances, stock options, employee benefits, tips that were received from a customer to an employee. And again, dividends are not included as part of wages as well too. So again, the application is open on the 27th. It's good until the 20th, until October 2020. So if you haven't applied now, you can apply anytime up until October. You're not losing anything, except just time value money, I suppose. And then the one other important thing to note too is you cannot apply for the subsidy until after all the wages in that claim period have been paid. So the next claim period was after April was May 9th. So if you have not paid an employee up to their May 9th services until now, or if they're on a monthly basis, you're not paying until let's say June 1st, you cannot apply for that second period until those wages have been paid on June 1st. And that wraps it up for the Qs for the moment. I'm going to pass it over to Mickey now, who will be talking about the announcements on the Canada Emergency Commercial Rent Assistance. I'm sorry, Mike McLaughlin, was it?
No, yeah, it's me. So one of the newer programs that I'm gonna speak on is the CECRA, which is the Canada Emergency Commercial Rent Assistance, and it's essentially a joint agreement in principle amongst the federal government and the provincial and territorial governments to provide a 75% rent reduction to small business tenants and commercial tenants across Canada. And how it works is it's only available to commercial property owners, and the mechanics of it is that the commercial property owner will receive a forgivable loan for 50% of their rent by CMHC. Then the loan is only forgiven by CMHC if the landlord also provides at least 75% rent forgiveness to qualifying tenants. And essentially the end result is the tenant only pays 25% of the rent and the landlord only forgoes 25% of the rent. Now this is the CECRA. Each provincial government is going to have their hopefully not a material twist, but they'll have a twist on certain eligibility requirements for each province. Now the program's set to run from April, May, and June. However, the application deadline to receive this assistance is August 31st, 2020. So if you apply for this assistance and then receive this assistance after August 31st, as a landlord, you can either provide a refund to your tenants for previous months paid at the full 100%, or provide future credit for those months. So as far as who's eligible as a tenant, only tenants who pay less than 50,000 of rent per month per location, and they would have had to have otherwise ceased operations or experienced a 70% decline in revenue. Now, this decline in revenue is measured very similar to the way that the wage subsidy decline in revenue is calculated. It's calculated by either comparing, say for example, February's monthly revenue in 2019 to 2020, or you can take an average of January and February and compare it that way. With that being said, this is only available to small business tenants that have under 20 million in gross annual revenue on a consolidated basis amongst all, and essentially at the ultimate parent level. And it's also available to NPOs and charities. And then for landlords to be eligible for this rent assistance, you have to have a commercial tenant. And further to that, one of the requirements is that they say that there needs to be a mortgage loan secured against the commercial real property. However, there is a caveat that says properties without mortgages may still be eligible, and that the CMHC would be releasing more guidance on what type of costs might be eligible for the landlords to receive rent assistance for. For example, maybe utilities. We really don't know yet what's going to be, what will be covered for landlords who don't have a mortgage secured against the commercial property that they're renting out. Further to that, in order for the landlord to qualify, a rent reduction must be given to the tenant of at least 75% for the months of April, May, and June, and the landlord must not evict the tenant during this time frame. Further to that, there can't be an attempt for the landlord to recover foregone revenue after this program is lapsed. And finally, the landlord must have reported rental income for either the 2018 or 2019 tax year. So right now, if you're a landlord or say a new landlord where the rental property just started to operate in 2019, important note would be to try and file your 2019 tax return as soon as possible, so that when you go to apply for this program, you have your T1 or T2 or T5013 readily available to show that you reported rental income in the 2019 tax year. Now, like I said earlier, it's a joint agreement amongst the federal government and the Ontario government to provide this assistance. And there are certain caveats that are specific to Ontario, or we could call this the OCECRA. One of the caveats is that mixed-use properties could still potentially fulfill the eligibility requirements to receive this rent assistance, such that if you have a property that has, say, a residential component, or you have a mixed-use property where you have at least 30% of the property from commercial tenants, keeping in mind that this rent assistance only applies for commercial tenants only. So your residential tenants will not receive this rent assistance. And other tenants that aren't eligible for this program are entities owned by individuals holding public office, entities that promote violence, incite hatred, or discriminate on the basis of race, nationality, ethnic origin, color, religion, sex, age, or mental or physical disability, or an entity that's in the lender's special accounts or restructuring group prior to March 1st, 2020. Now, the final caveat that we want to note, and probably the most important, is that the OCECRA doesn't cover landlord profit. So in this example, we have a landlord who charges rent of $10,000 a month, and the landlord's profit is $1,000. The amount that's eligible for the OCECRA is only $9,000. So the forgivable loan amount would be $4,500, and the total amount needed to be paid by the tenant would only be 25% of that $9,000. So it essentially equates to the landlord giving up 25% of their originally charged rent plus any profit. So it's important, or it's going to be interesting to see how this plays out with some of the caveats that the CMHC have written in regards to say mortgage payments or entities that don't have say a large mortgage interest amount on that needs to be paid. So the process is the application is going to be administered through the CMHC website, and unlike other programs that are pretty much all administered through CRA, this one will be administered through CMHC. The applications are expected to be opening up soon. They say mid-May, and it's important to note that all the onus relies on the landlord applying. So if you're a small business owner and you qualify as a tenant, I would highly suggest that you get in your landlord's ear to figure out if the landlord will qualify. And if you both qualify, then you have until August 31st to apply for this rent assistance. And I'm going to pass it over to Mickey, and she's going to talk about the CEBA and the CERB.
Thank you, Michael. So now we're going to look at the Canada Emergency Business Account, or CEBA. I know lots of acronyms. So CEBA came into effect, and it was to provide support for small business owners in need of immediate cash flow needs. So with regards to initial rollout and then changes, there hasn't been a lot of changes. It's meant to provide a $40,000 interest-free loan. Companies can apply through the financial institutions. The one thing to be noted is that 75% of the original balance, if is repaid by December 31st, 2022, then the remaining 25% will be forgiven. So that is up to $10,000. In terms of the process, so in terms of the feedback, the process has been very easy. It is initiated by the financial institutions. We've heard from clients that they've applied, and within 24 hours up to 2 business days, they had the funds available. In terms of eligibility, it's small businesses and not-for-profit. Other eligibility considerations was with regards to 2019 payroll, so it's the total employment income paid. That changed. Initially was rolled out to the threshold was 50,000, so that was dropped down to 20,000 up to 1.5 million, and that was a welcome change because it expanded the eligibility to more businesses to be included. Some other criterias which haven't changed since the initial announcement is that it is required to have a federal tax registration number, and it has to hold with the financial institution. It has to hold an open account as of March 1st, 2020. And the other criteria was that it cannot have any arrears on existing borrowing facilities for over 90 days. I'm just trying to be cautious of the time, so I know if there's going to be questions, we can always address them after the presentation for sure, during the Q&A. So like I said, the process has been fairly easy. It is administered by the financial institution. It's online application that is, so if you're trying to apply, contact your financial institution and your primary financial institution, and they can provide you with details. And like I mentioned, the money would be pretty immediately deposited in your business bank account. So they've been pretty fast in processing that. There are some restrictions in terms with how you can use the loan. It is meant to be used for non-deferrable operating expenses. So that would cover, but not limited to, payroll, rent, utilities, insurance, property taxes. It is not meant to be used for repayment of refinances of existing debt, payment of dividends, or distributions and increases in management compensation. So that is related to CEBA. Please, any questions, we can definitely go over them. Now, let's just switch in terms of to government programs related to individuals. So we'll cover the Canada Emergency Response Benefit, CERB, or CERB, another acronym for you, and then Canada Emergency Student Benefit. So with regards to CERB, it was the application has started April 6 when the application went live, and immediately after that, April 15, there were some changes to the eligibility which allowed for more applicants to be eligible, which we'll go over in terms of the changes. So I won't go into details in terms of a lot of details in terms of the eligibility, but we'll do a high level overview. We'll emphasize more on the changes. So CRB came out to provide financial support to employed and self-employed Canadians who have been directly affected by COVID-19. It is the $2,000 payment for a 4-week period, which is equivalent of $500 per week, up to 16 weeks. It is applied retroactively from March 15 and will run until October 3rd. And you do have to reapply every 4 weeks to confirm eligibility. The benefit, so I should mention that the benefit received, it is taxable. So when the individual does their 2020 tax return, it will have to be included on their tax return. High level, in terms of the eligibility, I did want to include this one, the first one that is on the slide there. If you apply for CERB or EI benefits from Service Canada, you should not be applying using a CRA website. So what has happened initially in the beginning was the way you can apply is online or by phone. Online, you can apply via the Service Canada website or the CRA website. So initially in the beginning, people were applying to both, and therefore they might have received a double payment of $2,000. So CRA has already put communication out there that they will check, and they will be sending out letters requesting for the payment to be, for the overpayment to be paid back. There is no penalties as of right now, but if you are aware that you have received a payment in error, a double payment in error, I would say put the funds on the side and be prepared to pay back. It's by mail, and there are instructions on CRA website how to do that. So in terms of eligibility, it's very clear that you would not be eligible if you quit your job voluntarily. That has not changed from the initial rollout. You have to reside in Canada and at least 15 years old. With regards to reside in Canada, so the clarification that came after was that you can be a permanent resident and you would be eligible to apply for CERB. With regards to the income, so the $5,000, so you have to earn a minimum of $5,000 before taxes in the last 12 months or in 2019 from sources such as employment income, self-employment income, or provincial benefits payments related to maternity or parental leave. That has not changed in terms of the $5,000. We'll go over some of the clarification in terms of what is included in income. I'm just going to go to the next slide. Additional criteria for eligibility. So in terms of the hours, so in terms of the works, you would have stopped working due to COVID-19. You were unable to work because of COVID-19, either because you're in quarantine or you were taking care of someone who was sick due to COVID-19, or you were home to take care of the children who were not be able to attend school because the school facilities are closed, or your work hours have been reduced because of COVID-19. What has been new in terms of when it was announced on April 15th was that initially you cannot have any employment income or self-employment income at least 14 days in a row during the 4-week eligibility period. That has changed to include, to expand the benefit available to other workers that would have not more than $1,000 employment or self-employment income. So that has expanded the eligibility. I should mention that when the so the application started April 6th, and as of right now, there's been more than 7 million applicants for the CERB. So it's been quite interesting to see the application level. The other change that came out on April 15th that has expanded again the eligibility was that if you were receiving EI before due to events before COVID-19, and you were still on EI benefits anytime between December 29, 2019 and October 3rd, 2020, and then you ran out and you went out to look for a job and you could not because of COVID-19, then you would also be eligible now for CERB. The types of the types of income that counts towards the 5,000 and the 1,000. So it's self-employment income. So that would be salaries. Self-employment income, which would be salaries. Self-employment income. So with regards to that is owners that take remuneration in the form of business income, for example, it would be net pre-tax income. So gross income less expenses. I know we're getting a lot of questions about that. So CRA has clarified that, and they actually have quite a few questions on their website going through, the most common questions that they got. So very good question, very good answers in terms of what they put out. So highly recommend that you go check that out. Any other income that would qualify towards the 5,000 or 1,000, their tips. Also, another important factor was the non-eligible dividends, and that of course applies to individuals who fall under the self-employment category. What's important to note, what it's not included is pensions, student loans, or bursaries. I know, I'm sorry, I've been going pretty fast on this one. I just want to make sure that I'm cautious of time and we leave enough time for answers, for any questions. I'm going to pass it on to Michael to go over the student benefit.
So the Canada Emergency Student Benefit that's been proposed by the government is essentially to provide financial support to students and recent graduates who don't fall under the CERB or EI umbrella, or are just simply unable to work as a result of COVID-19. As a summer student, you rely on those funds to get you through the fall and winter semester, and so the government's providing this welcome financial support to students and recent graduates. So what we know, so what we know right now is that the benefit will be $1,250 for eligible students and $2,000 per month for eligible students with dependents or have disabilities. Now, an eligible student is essentially anyone who's a Canadian citizen, a person registered with Indian status under the Indian Act, a permanent resident, or a refugee. So it's important to note that likely international students won't qualify for the student benefit. And in order to be considered a eligible student, you had to had to be enrolled at any point in time during between December 1st, 2019 and August 31st, 2020 in a post-secondary educational program that leads to a degree, diploma, or certificate. Or you have graduated from secondary school in 2020, applied to enroll in a post-secondary program that will begin before February 1st, 2021, and will enroll in that program if accepted. And another thing to point out is that this benefit, while it's taxable, likely the students won't have to pay any tax, as the benefit, depending on the income level, will be covered by basic personal tax credits, and if not, tuition credits. And another thing to point out is that the CESB is meant for those who don't qualify for EI or the CERB. You know, just to think about an example is a lot of students work in the hospitality industry while going through school, which has been greatly affected by COVID-19. And there's a good chance that they might qualify for CERB. And in that case, it's likely more beneficial for the student to apply for the CERB instead of the CESB, as the program's meant to get at the people who don't fall under that umbrella. And the program is going to be administered through CRA. So if you have a CRA My account, if you were to log on right now, you'll notice that there's a big red maintenance icon on it, and that tonight the CRA is undergoing maintenance in order to allow for this program to be administered. And that can, I think we have some useful links here that
yeah, and Mike, we just have I'm just for any information, if anyone wants to get more information other than what's been broadcast today, feel free to reach out to or head to our Grant Thornton website. We have a ton of articles and details on every single program that's out there. So feel free to go there on your own time for if you want to gather more information. And again, you have our contact information at the beginning of the presentation as well too, if you have any questions you want to raise with us out of any parts we talked about. Scott, I'll just pass it over to you at this point in time just to facilitate any questions. Sorry, we went a little bit longer than expected, but hopefully we can get through what's there.
That's great. Thank you. It's great information. And this isn't a serious question, but I wonder what's going to run out first, either the acronyms or the subsidy programs. Probably got a room full of bureaucrats in Ottawa just trying to dream up what should be the next acronym. I talked at the beginning of the program about confusion, and I think most of the confusion right now is around the OCECRA and the lease payments, because a lot of landlords are either not qualifying or not willing to investigate it. So it's leaving a lot of tenants high and dry. And I know, you know, the province and the federal government have talked about making changes. Have you heard about anything that might be changing with OCECRA so it's a more fair program?
I believe all that's been said are the additional eligibility requirements with respect to the Ontario version of CECRA, which is those kind of three caveats that I stated. It's expected the program's expected to start to roll out, they say mid-May. So I would imagine that more details are going to be released, you know, if not today, in the following week, if they're adhering to their own deadline.
And I know there was an announcement about the regional relief program. And in my mind, it almost seemed like the regional relief program was out there for people that didn't qualify for anything else. So I'm not sure if you know much about the regional relief program, but it seems to me that, you know, a lot of companies that may not qualify for things like OCECRA may now qualify for regional relief. So there may be a way for people to still get subsidies.
Yeah.
Sorry, go Mike.
I was going to say, yeah, because it's very new again, like a lot of these programs. So there was additional information out yesterday. And I think actually Adam Vancouver did a great job highlighting it yesterday on the call as well, that he had with the chamber. But yeah, it does sound like it's supposed to be, as he said, a backstop. So anyone that's not, that doesn't qualify for any other programs that are out there, this does seem like it would work for them, and that's what it's really there for.
So I guess the message for our audience then is if you're frustrated, if you're confused, if you're wondering whether now you qualify for regional relief when you didn't qualify for something else, then I'm sure Grant Thornton would be a great resource. But also make sure you talk to Parham and Adam if you're in Milton, because they need to understand the challenges that are facing business. And honestly, if they get enough people saying that the programs aren't working, then we may get change to the programs as well. So there's a confusion too around what the government calls stacking and how the programs relate to one another. And you've talked about it a little bit, but maybe you can just elaborate again in terms of, if an employee, let's say it's a summer student who is a university student, is getting getting CERB, so the $2,000 a month, now is coming to work for a Milton company. They can earn, I believe, up to $1,000 a month without having to pay back anything on the CERB. But now, if they also qualify under the Canada Summer Jobs Program, and the employer has applied for the wage subsidy, there's a lot of these things now that are coming together and making it very difficult for businesses to understand what to do.
Yeah, I mean, I can speak to how the CERB, how it relates to the wage subsidy program. So at the end of the day, I think the easy way to look at it is you can't get both under both those programs. So if, as an employer, if you want to claim the wage subsidy, the employee is going to have to pay back the CERB. So that's really the crux of it. Again, unless, like you said, unless they earn $1,000 or less within that 4-week period, then that's where they'd be allowed to claim both. Otherwise, one or the other you'd either have to disallow claiming the wage subsidy for that period for that employee, or the employee would have to, if they're going to receive wages over $1,000, they're going to have to pay back the CERB.
Yeah, I'm just looking at the questions, and one that came in was kind of related to this as well, talking about how does the student benefit work with the following. So it's listing the CESB, Canada Summer Jobs, Canada's Service Grant, Canada Student Grant, and Service Corps. So again, there's a lot of these programs that, traditional programs have been out there to help students, and now the new programs, and just the difficulty understanding how they all interrelate now.
With respect to the Canada Emergency Student Benefit, so those are just for the students who can't work and are not eligible for CERB or EI. So as far as that coinciding with the Canada Summer Jobs or Canada Service Grant or Canada Student Grant, I don't know exactly how. I don't know if you wouldn't qualify for the Canada Summer Jobs Program if you're not working.
Right. Yeah, and if you're getting the emergency student benefit, you can't find work, so you're volunteering, and then you get a stipend at the end. It's Canada Summer Jobs. You have a summer job, and your employer may have applied for the wage subsidy, but the wage subsidy would not apply for somebody that's under the Canada Summer Jobs.
Yeah.
And then if somebody is a student and they're getting a CERB, they get the $2,000 a month in CERB. They can get an additional $1,000 in income, whether it's directly or through Canada Summer Jobs funding. But as soon as they go to $1,001, then they lose their CERB.
Yeah.
Is that correct?
Yeah.
Okay, so a general question. Is there a reason for a company not to apply for CEBA, the $40,000 loan? It seems to me that, as long as you've got the ability to pay it back within the time period, there's really no reason why a company shouldn't be, if they qualify, they shouldn't be going for that.
As long as they're eligible, absolutely. Yeah. And there's no restrictions in terms of how quickly or slowly you have to repay the funds. So, but it has to be meant for the intended purpose, which is to help out businesses with their cash flow needs.
Right.
And then it's just a matter of tracking the how you use the funds.
And when we come back to the OKECRA or KECRA, I know Michael, you talked about some of the eligibility or what was happening with the program, but one of the questions is, is the rent relief covering TMI, or is it just really the base rent?
As in TMI, as in
Tax maintenance insurance?
No, it hasn't been stated what exactly they mean, but they say fixed cost. So I don't know if that also is your includes your utilities, your common area costs, or if it just includes your mortgage, that the mortgage interest for that entity. They haven't yet defined what fixed cost is, but judging by the way that OKECRA states that they're not going to cover landlord profit, to me it seems like they're saying whatever that landlord's cost is for the month, that's what we're going to cover under this OKECRA rent assistance. We're not going to cover the spread between your costs and what you charge your tenant, but it hasn't been determined whether or what encompasses fixed costs yet. Unfortunately, to not answer the question.
That's fine, thank you. So one of the questions is from a small business owner who has not taken a salary or income because they really couldn't afford to do that. So can they apply for CEBA to overcome the difficulty they have in getting their business back running?
Excuse me, no. So a specific requirement for CEBA is that you have to have a T4D issued for 2019, which means that you had to have payroll paid in 2019. So no, unfortunately, that would not make them eligible.
And again, do you think that there's anything in the regional relief that will help people like this that can't get CEBA?
It's hard to say. I think things are changing on a day-to-day. My only say to that is you just have to stay informed and watch the news on a daily basis, because things do change quite fast. And like you said, Scott, if enough people are providing the feedback, we've seen so many changes throughout this period, and that has been a lot of it based on the feedback that has been provided by the communities.
Yeah, and this was an anonymous question that asked that question about CEBA for the small business owner. So, as Mickey's saying, I think part of it for this person is make sure you get in touch with Adam's office and explain your situation, because they need to know how it's affecting all business people. So one question here is, you can earn up to $1,000 and still claim the CERB. But is that net or gross income, the $1,000?
I believe that is gross. So that is up to $1,000 gross of employment income or self-employed income. So yeah.
Okay, so I think we have answered all of the questions that I see online. So again, if we've missed any of the questions, or if people have things afterwards, please feel free to get in touch with the Grant Thornton office. The questions and answers, we've captured those as well. So if we know who's asked the question, we can also follow up with people. And I don't know if Mike and Michael and Mickey, if you have any closing comments.
Well, Scott, just thanks for having us here. We're happy to speak on any forum and to help anyone in the community that we can. We do see there is light at the end of the tunnel. I mean, like I said, last time we spoke, it was really doom and gloom, but things slowly do seem to be opening up. There are enough programs out there right now that seem to be supporting everyone, especially with the relief that was announced yesterday. There was a big announcement, I understand, today from the Ontario government in terms of a phased opening approach. So we're looking forward to seeing that. Again, thanks for just having us. And if we can help in any way, let us know, please.
Okay. Well, thank you again to Grant Thornton. We appreciate your time and your expertise, and thank you for everyone that tuned in to this episode of our COVID Conversations, members helping members. So with that, we'll bring the program to a close. Thank you.
Thank you,
Thanks,
everyone.
everyone.
Bye.